Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, March 16th, 2023. I'm telling you, the hits just keep rolling on in when it comes to these markets and their reactions to current conditions and how far our algorithms are going. So let's kind of dive in. The S&P and the NASDAQ, both pretty much from the get-go. Overnight, we saw a nice correction. We saw a pullback. Could have finished that, could have been done, et cetera, but we came down, we went up, and we broke that high. Then we went up, and we broke that high. So it forces, again, a little step back, take a different look, see what comes up. And instead of this being the complete move, i.e. a wave 2, and this being 1, and that being a 2, looking for the drop, kind of knew when I came in this morning and saw this, that it was like, nah, it's not. It is A and then a 5, so it's ABC. And then, of course, this was the result. So switching it around, and again, as I've been talking about, when you're working a fluid count or a working count, so this is an hourly chart on an index that trades pretty much 24/7. Take an hour off, so it's 22/7, or not actually 22/5. So, but it does trade, and therefore it is ongoing. So we're in an ongoing chart and labeling it as we go along to try to determine where are we and where are we going to go. So again, slight modification to the count that this whole thing now, so there is minute wave 1, and the entire thing is going to turn into minute wave 2. As follows. We have the A wave, the B wave, and now we're in the C. 1, 2, 3. Do a little 4, come up in a 5, and hopefully, this will be complete. So I may go 1, 2, put the 3 up here, and then put the 4. Or at this stage, would not be expected to really kind of start coming pretty far down. I mean, it could come all the way to there. In fact, I could go 1, 2, put the 3 here, that's the 4, and that's the 5, and we're done. That's kind of the alternate. I actually don't think that, and particularly because of today's expiration took care of the March future. So now everything's going to be based on the June future. And so what I see expiring tomorrow basis the June future and where it's lining up at, it makes me pretty much feel like they want it above 4,000 yet again. So while this is in motion, we did touch it, by the way, after hours. We did touch it. And at 4,000, right on the nose, there were no stops. And the reason is because it was after hours. And if there were stops, they were canceled on the bell. So what do I want to do? I want to now add what I think maybe, and I've got to take this back out a little bit so we can get the whole thing. So I'm going to go A to B to figure the C wave. We're going to use the extensions. So from there to there and back down. All right, so right now we've reached 100%. That was today. Actually, I think that's why it is holding there, because this and this are of equal length. But I'm looking for the completed 5, and right now that could, I again repeat, it could be it, but the way that they've been trading, I'd be like, no. That would mean from here, something big happens and we nosedive. And I don't see it because, in my opinion, it would leave this as a 3. So instead of a 1, 2, I mean, I could, but I have to put the 3 there, the 4 there, and the 5 there against how it's gotten up here? No. Now, you could, if it turns from here and some news drives it lower. And the only way that happens is if it drops below there. So as soon as it drops below 39.48, then it's likely that is the way it's going to be. If it did it before finishing, or what I would term as finishing, then it is going to be all complete and we're taking it lower and we're just going to go. And that, again, I don't change on that fact. We will know when the turn is happening because it's going to be rejected, and it's going to be rejected big. So let me put it this way. If we get another one of these, at least the beginning of it, that rejection part is a good trade. And at this point, we keep extending out this process, and it is now, in my view, kind of getting to a point where it should finish up. Can wave 2 continue? It can, because remember we had before double ABC. Well, it could happen again. If this now is all stretching out to one ABC, and we put an X wave in and do another, it's stretching out in time. I'm not truly expecting that. Okay, so tomorrow, what do we have? Upside, little fork coming back to maybe 39.88, which basically is already touched. Next down would be 39.80. We should have additional support down here at the 50 at 39.70. So we have 90, 80, and 70. And I imagine if you run fibs from there to there, it's going to stack up pretty tight. It's pretty much how it was for resistance on the way back up, or for the C wave. Now, on the upside, a little bit of nothing here, all right? We have to go over too far before we find strong resistance. So once above 4,000, yes, I'm sure 4,010 because it's a strike price, above, below. And then we have, I believe, 4,000. Let me see what we got. We have 4,000, 4,005, 10, 15, 20, 25, 30, right? Now let's go back over to what we have. Well, we have 4,000, 4,005, 4,010, 4,015, 4,020, 25, and 30. All lined up right there. All in between the fibs. So it can move freely, bouncing around in there. So, but as a fib basis, we have 40.29 or 40.30, and then 40.50. I actually don't want to see it because now I've got to draw my lines up a little higher each time, but now we're at 40.62, which is the beginning of that minute wave 1. And if this is a minute wave 2, then it can't go above there. If it does, I'm backing it up again. That's my only choice. I keep backing it up to see where I have to go back to restructure it. And sometimes it gets a little bit further and further. Now, ultimately, this continues to be a process of not having to complete an upside move. The stronger upside move, in my view, continues to be complete. And that's going to go out here. This, I'm not moving. I have no reason to move it thus far. So far, this all is sticking. If we break above 41.50, then I got another story to tell. I got something else to talk about. So in any case, I'm not looking for that. This is still all fairly nicely contained as a second wave. Even on my 4-hour chart, when we continue to open it up, it does look pretty clean as a 1 and a 2, and still within parameters that should contain it. Okay, because just to kind of say, I'm going to take off that C wave, and now we're just going to put a little extra down here. And we're going to go from that high to that low. Now we just have straight fibs. B wave, we hit the 50%. That was today. 618 is 40, 27, 75, 40, 30. So 25 to 30. So once we get above 4,000, it should go very quickly. We should move very quick. First of all, stops. Second of all, then we have some quick resistance at those strike prices. But we'll see the open interest flame higher at those strike prices. And again, just to take a double check, we have 4,000. I can only tell you where it's closed because they haven't reopened. 2,083 open interest at 4,000. I expect that to grow pretty quickly overnight. Next up, we have 40.15 to 40.20, and they could grow overnight. So, and then it thins out. So those are the majors right now that we have. We have some down here, but they're already in the money. So we'll see. All right, over to the NASDAQ. Basically, same stories. Both kind of crazy during the day, and the moves that they made was really kind of crazy, just like, whoa, shooting straight up. And again, it wasn't the hardest day to make money, but it wasn't the easiest, because there were a lot of really strong moves in between it. And so even though you were right, I always advise or encourage the use of stops. So particularly because many people in the market are not trading with huge accounts. They're trading with $25,000 or $50,000 or $100,000. And so there is a lot more stringent risk management skills that are going to be needed, because you can't allow a trade to go against you before you would start really losing bigger money. And in the NASDAQ and the S&P, that becomes very possible when the swings are $10 to $15 to $20 within less than a minute. So that's the type of volatility that we've been experiencing. So while it's good, it can present its challenges. Here in the NASDAQ, it's the same deal, except here I did mark the third, this very small third, and so the labeling has changed here as well. And so you can see that I've actually brought this down. Instead of being minor one, it's a B wave. So, or minute one, it's a B wave. And so let me just pull this up one notch to I did back it up a little bit. And right now, this A is actually going to go above there. And so we're in the minor two still. We're in the minor two. So this goes away and actually will become a C wave. So let me just change that. That's what this will become. This is the C wave. So we have the A, the B, and it's an irregular B, and then the C wave. So let me open that up a little bit. This again is the 4-hour chart. It does look weird, but now I'm going to add some fibs so that we can see how this all fits. First thing I'm going to do is just some retracements. If this is a 1 and I'm measuring out the A, I want to know what a B wave can do. I'll look at it. Again, I had pointed this out previously that this was an irregular B wave. And here we have it again. So instead of this being minor wave, this being the end of minor wave 1 and this being the end of minor wave 2, I'm bringing it back down and bringing the minor wave 1 down another sequence. And ugly as this is, ugly as it is, and trust me, I agree, it is very ugly. But it does count. And I would have to put a 3 and a 4 there. And then this is, that is the 4. So it's an A, 3 here, ABC 4, 1, 2, 3, 4, 5. Not the prettiest, but it counts. So I moved it down, wave, minor wave 1. 5 up for wave A. Turning this does still present a problem in that normally you would not associate an irregular B wave with a zigzag. But here we have it. Doesn't mean they do not occur, obviously. Now, somebody else may have a different interpretation, but right now I'm fluctuating between a lot of different scenarios to include this run and still leave my larger count in place without having to back up to this level. Right now, I've backed out to the minor degree level, but I have to back out to the intermediate degree level. It's like, wow, okay. And that would change a lot of things all the way up. So again, minor 1 in the minor 2, bringing it back down. So that is where that fit as an irregular. Now we're looking for wave C. Most common now, right? When we have the irregular, And we're going to go back over and now set it up with our extensions for wave C. Again, starting at the beginning here, going up to the top of wave A, down to the bottom of wave B. There's the 618, right? If this isn't irregular, what is your most common going to be here? First off, it would be 1.382. This came in at 1.236. So the two on the downside, the two, or at least on for the B wave, are 1.236 and 1.382. This one hit 1.236 on the nose. So, but it's also now hit 1.382 for the C wave. Looks like it only completed wave 3. So that brings us out. We come into a 4, we go back up in a 5, and now we're looking at 12,864, 865. That would be topside, popping it over 12,900. I'd be like, wow, somebody is, and again, they're algorithms, and I'm trusting that these algorithms are not pulling in fresh money, but they're trading. They're trading. You may want to sell it at 12,920 or buy it at 12,920 if your position is already locking it up where you're selling it higher. And you can do that with the options. So if you can line that up, yeah, you're going to be more than happy to be 12,920 if you're selling it at 12,930 and you're taking your profit. Done deal. So there could be a lot of reasons why it gets there without us saying, oh my God, look how high it is. Again, algorithms are going to drive it there, and we don't know what the algorithm is doing against it. Okay, fair enough. So there we have our upside. And again, it's the same story, because once again, what am I looking for? The completion of a second wave. What am I looking for in the ES? A completion of a second wave. So both are lining us up to drop in a third. I believe that the S&P will be dropping in a different degree third, but still a third wave. And this one should kick off in grand style. I'm up a degree. I'm up on the minor degree. These have all been minute or less degree runs, and we've traded them now. Increase them in intensity. I'm taking it up a degree. So you're going to be back to dealing with a minute, and these have been sub-minute runs. So that's why I'm saying the intensity, you take it up another degree. All of these are sub-minute. So I'm looking for the whole minor. I'm looking for this third to kick butt. I don't care if it starts here, here, or here. I'm looking for when it kicks in, it's going to drop, and it's going to drop fast. It should be a rejection, solid. This ended up being a rejection, and it was solid, but it was on a much lesser degree. But it just take you back. Let's just go back to Wednesday. Right? Today's Thursday. Let's go back to Wednesday. Oh, so long ago when we were at 12,300. That was a rejection. Sub-minute level, actually sub-minute level. Still, nice move. Magnify that, not once, but twice, at least give it twice. So how big should it be? This big, right? 500 points. A nice kickoff. Let's drop 500 points real quickly. So wipe all this out, or however high it gets, let's take it that way. I would be expecting it to take it all out in pretty quick fashion. So again, I think it will be triggered, and the trigger will be powerful enough that the algorithms that get clicked on to jump up and buy will either get swamped and broken, or just so overwhelmed they turn off, or they get turned off. Because it depends on what the input is and who's pushing what button, to be honest with you. But I would think that the market turns seller, and there'll be something that indicates that that is correct, and boom, the buttons get pushed. So in other words, we've seen these reactions off of the numbers, and then immediately it gets bought back up. That's because somebody's algorithm is not turned on the same way as all the others. So if that gets changed, and we get something that's negative and everyone's not perceiving it good, timing is right, it will go and go and go and go and go. And that's what I'd look at for here. But right now, for tomorrow, look for it to go up a little bit more. Tomorrow is the March expiration, so it's the monthly, it's also the quarterly, although they might wait and cut the last expiration of the month, the last Friday, they may call that the quarterly. In any case, for tomorrow, we have industrial production at 9:15 a.m., and then leading indicators along with consumer sentiment at 10 a.m. So no 8:30 a.m. Eastern for any of the numbers. So these would be considered lesser, but they can still move. They could still trigger an algorithm, and off it goes. As well, we still have plenty of news that could switch overnight. All of it being volatile. Right now, they've got Band-Aids on, but I'm telling you, they're just like little strips. And if it really becomes a gusher, it's going to blow right through that Band-Aid and everything else around it. All right, this is where I'm going to leave it. Our moving averages, unfortunately, are all turning higher, heading higher. And so that's another reason why I think the turn has to be very hard to halt this and turn them immediately to the other side. This one will go flat for a while. This one may swing down, finish that, go flat, and then go swing back down to here. As it comes down and goes through that, it'll turn quickly. As it goes down and do that, it'll turn quickly. So again, I do believe there's enough out there in the world to produce that kind of a move. One more time. Elliott Wave does not know anything about the news. It doesn't forecast the news. It doesn't forecast what will cause a move like that. But what I am saying is there are enough things within the economy, within the country, within the globe, particularly to deal with the banking sector right now. They're on edge. Does that mean that I really am looking at JP Morgan or Goldman Sachs or any big Bank of America? No, not really. I am giving credit that they are big enough, smart enough, and have the team of people that watch all of that, making sure things stay in balance. Doesn't mean they don't get caught every once in a while, because I know that they do. We all do. All right, that's where I'm going to leave it. Our next update will be actually on Sunday. So first of all, have a happy and safe St. Patrick's Day on Friday. And then the next update will be on Sunday, March 19th.